JJ the CPA here. For those advisors that are getting involved in the PPP forgiveness, just take this video maybe more just of some things to think about. The SBA has not come out with full guidance related to this. I know they've hinted at a few things. They've left some breadcrumbs. I know that the tax law indicates a number of things in 1106, of course, and if you look at E, it indicates what's going to be asked for and brought. But when we were helping our clients, those advisors that were with our clients' calculations of PPP, we were pulling that together because it was just a calculation, and it was pulling together things we're familiar with, Schedule C, 941. But if you remember, it was April 3rd that we were able to apply for those that even did. And then the SBA came out with some guidance on the 3rd, and then on the Monday, the 6th, and then more on the 8th, and then more on the 14th. And then they've come out with some additional things on the 24th. And, each time the SBA's done a good job of kind of tackling questions at hand and making things maybe a little simpler, or just saying, it's gonna just be based on this. Because, if you think of the tax law related to the CARES Act, is related to things that are related to the tax return, right? So employee retention credit, the deferral of the Social Security tax, the technical correction on the QIP, right? Qualified Improvement Property, now 15-year, boom. And, a number of other things, excess business losses being basically deferred and don't apply for 18, 19, or 20, the NOL being able to carry back 5 years, being able to carry over at 100%, things to that effect. And so those are definitely things that we want to be involved with. I don't know really any other aspect of PPP that we would want to be involved with. And I know that for whatever reason, and I haven't received any negativity, but for whatever reason, we're getting involved with it again on the forgiveness side because of the IRS coming out with their notice. Let's see, it was 2020-32, where they're saying, hey, not going to be able to deduct the expenses paid by PPP. And then, of course, now it seems that there's a challenge. I'm actually a little surprised that the AICPA is challenging it. Now, I know that feels like that's over in the tax realm now, right? But actually, it's more legal. That's more of a legal kind of description and determination. And you know what? It's great that the AICPA is going to bat. And because the IRS came out with an interpretation, the AICPA then is getting involved. It's never a bad thing when the AICPA is going to bat for, America, the small business owner. And I'm not even saying it's a bad thing that the AICPA is doing that, but I don't really understand it, why. And I really can't. The surprise to it and the aggravation to it is, it doesn't add up to me. This is free money. I know it's like a capital investment, into the small businesses, but how else do we calculate? I mean, how else is this accounted for tax purposes if it's not taxable? I mean, what you just put on the balance sheet and it's an investment. I mean, does it increase the basis of the business owner? Is it considered, in essence, a distribution as the business owner takes it out? How do you put it on the balance sheet, right? I mean, it's a liability because it's not going to get credited to income. It's getting credited to a liability. How does that go away? It gets credited to capital account. How's that go away? So to me, it's kind of not logical to me why we think at all that it's not how the IRS interpreted it. I mean, it's pretty obvious to me. I felt like I knew that when the Senate passed it before it actually became law. And I'm not even saying that from the standpoint of, that I'm somehow ahead of the curve or something, but this was just shocking to me, how shocking it was to everybody else. But this really brings me back to my point, is that That's on a legal interpretation. It's not an IRS interpretation. So if you're thinking for 1 minute that you should somehow find a way that your client should be able to deduct the expenses that they've spent with free money, then how are you accounting for it on the first thing? How do you accounting for it on the debits and credits? Okay. The second is, this isn't something that we should be picking a battle over. Now, whoa, I may disagree. Well, how? How are you really actually going to disagree? And so this is kind of where I'm at. Are you basically getting ready to be now the fall person for how this all comes out? Who is the messenger when it comes to the IRS's interpretation, as well as the results in essence of the IRS's interpretations, right? Us. We are, okay? So just, you're gonna lose. And I'm not even saying it like, I'm not even saying, well, I'm right, and therefore I know you're going to lose. But here's the thing, the grants have always worked this way forever and a day, forever, which is when someone gets a grant, it's not income, but then whatever they spend it on, it's not deductible. Like, this is deep rooted. So it's not, this is something that came out of the CARES Act, and we've never dealt with something like this before in the sense of a grant. But I think it's it could be a lawsuit waiting to happen on you. It's already bubbling up where you have businesses that have gone out of business and they're suing now everybody that they can because they didn't get PPP, right? Even the SBA is supposedly getting sued. But from my perspective, let's just go all the way back to the beginning of the video, which is the SBA hasn't even come out with full guidelines, full FAQs in terms of just starting with 1106D5, which is really what's going to constitute, and I'm reading it, the elimination of the reduction in the number of full-time equivalent employees. How is that really going to be defined? And the elimination in the reduction in salaries or wages of one or more employee. Like, how is that going to really be applied? And you're going to really kind of surprise me if your knee-jerk reaction is, well, you just see that they a hired person, you can see that they brought it back, and then you can, okay. Anybody that's talking that way has been around for a while. Okay, and anybody that's upset about this probably been around for a while, because people that are new to all this don't even know what to be upset about, right? So from my perspective, given that the SBA hasn't come out with anything, the IRS has done this, now AICPA is somehow getting in the mix and getting people riled up. I think you need to step away from it. I think it's a lawsuit waiting to happen, and not that you should step away from something because there's going to be a lawsuit. But I mean a lawsuit in the sense that you don't have any skin in this game. You have no authority. You're not going to be able to make this argument anywhere, okay? Unless you're a tax attorney, okay? You are not going to be able to take this to court. You're going to lose when you argue it to the IRS. You're going to be and I'm just going to say it straight up. I mean, you're going to be actually committing a level of gross negligence, which would equal constructive fraud. If you're for a second your client's going to take money, you're going to report it non-taxable, and then you're going to deduct these expenses. If you're thinking about going that direction. So if you're getting your client all fired up that you're going to, AICPA and we're going to do this, and you get decisions being made on that, you're looking at a lawsuit, in my opinion. In the sense that you're just getting way out and ahead of this. You're getting way too involved with it, with an area that I don't really feel like we have expertise in. Expertise in interpreting law, as in law. Okay, we get involved in the taxes, right? This CARES Act includes tax aspects, but why do we get involved in it is how it affects the tax return, and we go by the interpretation of the IRS of the law, okay? The IRS interpreted this as non-deductible correctly based on long, deep-rooted interpretations that have not been challenged. And if they have lost on the challenge, that when you receive a grant, it's not taxable, but when you spend the dollars, none of what you spent is tax deductible, period. So really at the end of the day, I want you to think, why are you digging in? What are you getting paid to do for it? And do you have any authority to do it? And you haven't had even SBA weigh in on it in terms of the other aspects of forgiveness. So I think there's so many other things in the CARES Act. There's so many other aspects that we need to be worrying about right now with the new tax law and some of the changes. And looking back, do we need to amend 18? Do we need to go back and look at our bonus depreciation? Do we want to do any carrybacks of NOLs? Because if we're going to do any carrybacks of NOLs, then how's that coming forward? So I just think we need to get out of the PPP business. Okay. Here's our involvement in my opinion. Our involvement is this. What'd you get? It's a credit. Where is it going on your client's books? Okay. The money that's spent, how's it getting put on the books? How are you going to put it on the tax return? It's been handed down. Okay. It's been handed down. Now, as it relates to the forgiveness part, okay, I don't think you should touch it with a 10-foot pole, because the banks aren't even coming out saying, we need this. All right, banks are saying, hey, you know what? We don't have any guidance yet. So by the time the guidance comes out, it's going to be near probably the end of the 8 weeks. And therefore, you have been giving advice or helping or advising or calculating. And then all of a sudden there's going to be guidance that comes out that may contradict, right? I mean, think of the SBA when they came out on the 14th and they talked about what the self-employed individual includes. Really up until that point, it was like, well, it made sense. It was going to include self-employment health insurance. And then they said, nope, it's line 31. That's it. It didn't make sense to me that utilities would include gas used in your car for business if you're a sole proprietor, but it does. So I think on the calculation of forgiveness and what's needed and how do you get to forgiveness, and if you're relying a lot on 1106 D5 to say, hey, don't worry about it, client. Why would there be a lawsuit in something like this? Because this is real money now, right? It's probably a situation where you wouldn't have been sued, because if you're doing tax stuff, the taxes are the client's, period, the end. They rely on your advice. It gets audited. They owe tax. The tax is theirs. The tax is theirs. I mean, you might get sued for that, but it won't hold up because the tax is theirs. What you could get sued for is, interest penalties, right? If you, in essence, made a position that was not under, the guidelines of Circular 230. So, I don't know. These are just my thoughts that there's so many pitfalls with PPP forgiveness. I'm not necessarily one that's just like, well, IRS said, but I'm just telling you what the way the IRS interpreted this is correct. It's consistent. We need to move forward with it and need to spend our time on other things. And then as it relates to just forgiveness in general, I think you've heard what I had to say on that. So this is just more of a like, hey, let's think about what our role is and let's stay in our lane. So, all right. Hey, thanks for tuning in. I'd love it if you'd subscribe to my YouTube channel. And boy, I tell you what, we are in unprecedented times. So good luck to all the things that you're getting ready to deal with as your clients are now opening back up for business. And I know that PPP forgiveness feels like a hot issue, but everybody's getting ready to go back to business. You're looking at, 100 days or so. Shoot, not even 100 days. We got May and June. So we got 75 days till the July 15th deadline. Things are going to start moving fast. So let's move on to something else. And then I think you'll be glad that you did in the long run. And you didn't lose sight of actually what our clients need from us, which is the tax aspect of this and the deductibility of what they get from PPP is not part of what we need to be paying attention to. And then I'll tell you this real quick. Here's the last thing. You ready for this? If you do believe that your client should be able to deduct it, okay, then that means they didn't take PPP. Okay? And if your client wants you to find a way to deduct those expenses, okay, then tell them to return the PPP. Pretty simple. Don't take the free money. Don't take the free money. Okay. And if it was a capital investment, here's my last thought, then why didn't every business in the United States of America get one? It was not an investment in the capital of the small business owner when it was given out discriminately. Okay. And not every small business got it. So this whole argument about a capital investment could potentially be true if every single solitary business got it. All right, food for thought. All right, thanks for tuning in.